RainFin has announced a new deal with Barclays Africa, a partnership, and that will see the two entities offer SMEs unsecured working capital loans within 48 hours after application. For more on this story, we're joined by Eugene Boyson, Chief Innovation Officer at Barclays Africa, and Sean Emery, RainFin CEO. Let's start with you, Sean. Give us the background to this deal.
This is very exciting. I think RainFin, as you know, launched in 2014. We started off in consumer loans.
You came and chatted to us, I remember.
We did, yes. We just started after that stage. Barclays Africa had bought 49% of our business. And for the last 2 years, we've really been working and refining the way we do SME lending as well. We're really excited now to launch that ABSA is now becoming a commercial partner of ours in the rollout of the solution to all of the SMEs that they have. So in essence, RainFin is going to be a channel partner. They will be directing SMEs to the platform to be able to do their SME lending through that particular marketplace.
Eugene, no doubt this is going to be good news for SMEs that are already aligned to that particular channel, but what does this mean for the business of the bank?
So I think good news for us, not just from SMEs, but enterprise development. This started out 2 years ago. Our investment in RainFin itself, it was largely around, we saw business opportunity over here. We put our expertise together, co-collaborated, co-created around what it is we wanted to achieve. And I think on the back of that now we're starting to see a maturing of that offering. We wanted to bring our platform, what we had in terms of clients, and bring it to bear on what RainFin was able to create for us. So we end up with a proposition that's a lot cheaper, a lot more effective, it delivers something a lot quicker, and gets a product in front of our clients that works for them.
Sounds paradoxical in a partnership between people who do different things and do some things better than the other partner would do if they were on their own. I mean, it's a paradox. You've got lending criteria being tightened by the banks, we've got interest rates likely to go up, and now there's a story of more access to loans for SMEs. So it goes against the trend. Where is it that you're able to take this risk, Sean, that enables you to go against that trend?
So I really think we're definitely not encouraging more risk into the process. I think what's very important is that small unsecured loans to SMEs below R1 million used to be very costly for a bank to write in their manual offline processes. These traditional banks have the opportunity now to work with fintech companies like ourselves to create much more efficient transactional costs and processing. Therefore, it's cheaper for them to actually service this marketplace, and therefore they can actually start lending to this marketplace where they might not have lent to them before. It's very important for us to fill that gap in their product offering, or be able to use the marketplace. And what a credit marketplace brings as well is other funders, not only the bank. So it allows the bank to partner with other institutions to fund to a segment which they may not have been comfortable with in the past, and they can share risk amongst each other. That works really well in our South African environment, where we have enterprise development initiatives and where corporates can now lend alongside the bank through the marketplace to SMEs and do this joint lending together to expand this segment.
We all know the stats that are usually thrown around that small and medium-sized enterprises usually never survive past the first 2 years of existence. And when you start making available unsecured loans, again, maybe going back to the point that David was making, does this mean that you're exposing the bank to more risk?
It's not so much exposing the bank to more risk. A lot of these are clients who've approached banks. It hasn't happened quick enough. The need's very certain, it's very immediate. I think what's changed in terms of this dynamic is how we look at the underpinning scoring, how we're able to evaluate them, how we're able to ascertain affordability, and more important, our ability to go leverage supply chains, corporates who are already lending to these, and the ability for us now to access much better detail related to invoices, past contracts, performance against those contracts, and the services they provide. And with that, we get a de-risking mechanism that's embedded within there. And as a data construct that just wasn't available to us or built into our existing models.
Maybe you've both got perceptions on this, and maybe there's no final answer, but how big is this market, and what kind of growth might we be looking at here once this partnership gets going? Sure.
Well, ABSA has 330,000 SMEs that they are presently servicing. I mean, that's a relatively large chunk in itself.
Is that a market share terms? How
and
big
that represents, what, 25 out of the market share? I'm not sure. I'm not exactly sure what their market share is. But in this context, we believe there's around 1 million SMEs in South Africa. An SME being someone that's a business less than 100 million in this context. I know they have different measurements in context, some are below 50. But we believe that this segment has just not been lent to because people didn't understand the data around it. What's very important is that once we have fintech in place, where we can monitor someone's financial accounts on a daily basis, where we can see someone's transactional history of invoices and money going in and out of their accounts daily, these are things which banks couldn't do 5 years ago. That allows us to actually be tighter on the risk, but be able to still lend to more people because you can now get into that data.
I wouldn't lose the social angle. I think one of the big focus areas is how do we release this economic potential. I think SMEs are focus, enterprise development's a focus. If you really want to power the real economy, you've got to power SMEs. And this gives us the ability to do that, and I think too often that's lost in the equation. I think too many SMEs are funded by underlying family as opposed to the formal capital transformation mechanism.
Two quick questions. The first one being the sectors that are likely to be prioritized if there is a prioritization. But also maybe as a second question to you, Eugene, one would typically think that development finance institutions should be the ones sort of playing in the space. The fact that you've identified this gap, would you say that DFIs are not as active as they should be in terms of making capital available to small and medium-sized enterprises? Let's start with you, Sean.
Do you mind if I take that development question as we can? So what we're clearly finding is that there are a lot of development institutions. There's a lot of people who want to lend to SMEs, just like ABSA want to lend to them. But what they needed was a really effective and efficient channel to do that lending. And this way, that's what the RainFin credit marketplace is. We're a channel where investors can come, they invest through RainFin, they buy these loans, we take all that issue around originating, putting the loans on the platform and getting them into the marketplace.
Quick finish from you, we're almost out of time.
The sectors.
So I think for me, the real success measure is being able to come and release this capacity that sits there, it's in the marketplace right now, accessing those SMEs, enabling them to make that underlying change we're looking for in the economy. I think it is about a real economy play, and I think it begins to shift business. And I'm glad to participate as a part of that in terms of creating shared value. Creating shared value in a fintech startup in terms of what Sean and I were able to do in RainFin, and creating that same shared value around how
So
to
any
release the
sectors in
capacity.
particular that are going to be prioritized?
Well, what's quite important for us is we have better scoring on companies that are supplying large corporates.
Okay.
In this context, so companies that are in the supply chains of the corporate customers of ABSA.
Well, we'll have to stop there, unfortunately. That's Eugene Boyson, Chief Innovation Officer at Barclays Africa, and Sean Emery, RainFin CEO. And that's where we have to leave it for tonight.
Well, certainly very interesting conversations tonight. Enjoyed the conversation with Eric Venter, being very candid there about the impact of the visa regulations, as well as, of course, that 31st of December decision that had a 91 million rand impact on the business.
In a moment, back with the Money Manager. I'm stunned by that 92 million rand.
Over the years, we've helped businesses lower cost and increase productivity through world-class voice, connectivity, video and broadband services in South Africa and around the world.
Take part in the 4th edition of the Africa CEO Forum, the foremost international meeting for African CEOs, bankers and investors. Network with Africa's top business leaders. Establish strong and lasting relationships with visionary and influential investors. Gain exposure through substantial international media coverage. Engage with cutting-edge, original and innovative ideas. The Africa CEO Forum, 21st, 22nd March 2016 in Abidjan.
Good afternoon, I'm Bridget Taylor and this is Currency Wars.
The data coming out of Europe is fairly decent, 1.5% economic growth.
Currency volatility and dollar strength are driving the divergence between the US Fed and the ECB. The rand rate of deterioration against the euro as it markedly underperforms.
But I think the divergence will continue. I think it's definitely on the cards for the beginning of 2016.
It's not been a money supply issue, it's a demand for money, and all this points to less demand for money.